Good morning, everyone. We are kicking off the week of trading with Jim Cramer on the floor of the New York Stock Exchange. Jim, everyone talking about Facebook and Cambridge Analytica.
Right.
Stocks are down 5%.
Well, I think that people are trying to figure out what do you do when you own a company that seems like it's got a high valuation, more on that in a second, that's in the crosshairs of a government. And the answer is, well, if it's Facebook, people have decided, you know what, we're not going to try to figure out what we're going to pay for it. We're going to sell it. And we're going to sell it because it's up really big. We're going to sell it because we're exhausted by it. We're going to sell it because every day we pick up the paper and there's something new. We're going to sell it because Steve Bannon's involved with some company that maybe take good information where Facebook didn't think that they really were anything other than a common carrier. The headline risk is too great. And you know, we sold some for action alerts in part because the headline risk was too great. So we got ahead of it, but that's the new storyline, and until it gets to some level, I don't know, 18 times next year's earnings, who knows, where you feel like you're compensated for the headline risk. I think people are exhausted by Facebook. They're exhausted by having to deal with a company that doesn't seem to recognize that they don't have a lot of friends. I think they feel that they are liked, so to speak, and they're not.
We're also seeing some broader declines in the FANG stocks. Is there worry that sort of broader regulation will hit these companies?
Yeah, we made that very clear. I think that what's happened is that there's concerns that the EU is trying to tax these companies at some level. I spoke with, I was on with Will Frost this morning. We were talking about, is 3% right? If there's transactions that are done in Europe, shouldn't Europe get its fair share? And then you start thinking, well, how about this is a way to for the EU to get back at President Trump with steel and aluminum tariffs. So world trade is being viewed as a negative right now. In other words, it's too hard to fathom. FANG being viewed as a negative because we don't know what the tax situation is going to be. So we revert to Micron, which is low multiple but very momentum, that reports this week, and an Intel. And I mean, I look at a Broadcom, which has had the stuffings knocked out of it in the last few days, and I say, wow, this stock is very cheap. Nobody cares right now. Anything that's in the headlines is too much for people right now, and that doesn't last. I mean, there'll be a certain point where people say, you know what, why did I sell Facebook? What was it? It was involving the Russians and something Zuckerberg. It's going to be very hard to own them today, but it might not be so hard to own them, say, Thursday.
You mentioned trade. The CEO of United Technologies told you that a trade war would benefit no one.
Right, and I think the problem here is that the president has people surrounding him, and he feels this way, that we've been in a trade war forever. We're just not fighting back. So I think Greg Hayes represents the storyline of, well, wait a second, no, we're in a trade war, but the companies that are being hurt, well, we're big buyers. We try to protect them. We're big buyers of steel, big buyers of aluminum, but maybe we can pass we can pass it on. But we don't want to be in a situation where we lose or get closed out of certain markets because we put a tariff on. And this is be a theme you're going to hear tonight with Emerson, with Mr. Farr on Bad Money. This is a theme that what we're seeing is, you know what? The U.S. is protecting its workers at the expense of capital, labor over capital, and this narrative is just going to grow louder and louder.
Greg Hayes also broached the subject of a possible breakup. Do you think that's going to happen?
Yeah, I do. I think if the stock stays here, because I think that there are shareholders, very smart shareholders, including ones that discussed it at the United Technologies Analyst Day on Friday, that believe, look, maybe more value could be brought out. I analyzed the board of United Technologies, and it's unique. It's unique because it has a lot of people who've been involved in splitting up companies and breaking up companies in order to bring out value. So if his board, I think, is uniquely set up to make a determination that more value can be made by splitting up the heating, climate controls, Otis, and aerospace. So I like the stock. Remember, though, every time we get a story about trade war, you're now going to link it with United Technologies. I guess one of the things, I'm warming up on this for today for real money, the number of stocks that have become controversial is almost unfathomable versus a year ago. There's the controversy, the headline risk in so many stocks is beleaguering to people. So I think that's making people, let's say, become risk averse. By the way, there's also, I read an article this weekend about how much of the market is that people only buying ETFs and not as much individual stocks. Well, it does feel that way. 46% of stock is now being bought through ETFs, but maybe there's, maybe the FANG ETFs getting sold. But overall, what I'm looking at is that individual stocks are under fire, and then they tend to bring down their whole cohort. So I'm just saying, be a little careful. We got a Fed meeting this week, but at the same time, you can't keep taking down the market for the same thing over and over again.
Well said. Meanwhile, Jim, Newell Brands striking a deal with Carl Icahn.
Yeah.
You think Martin Franklin will be satisfied?
I think he will. I think that Martin wanted. The way I looked at it, and I haven't gotten from Martin's group, but Martin sold Jordan to Newell Rubbermaid. Jordan businesses did better actually than Newell's. Some of Newell's businesses have hurt them. I think that Carl Icahn will hasten the sale of Yankee Candle. I think he will hasten the sale. Remember, he's got a really good, Patrick Campbell's former CFO of 3M, hasten the sale of Jostens, which really doesn't work that well in the pastiche. Yankee Candle been one of these companies like a failed bid, failed auction. Jostens, really hard to value. Clean up the story. And people will say, you know what, this has become cheap. And so I think that Martin's going to support the people that Carl Icahn has put on, including Brett Icahn, his son. I still need earnings momentum, and I don't see any at Newell.
And you got out of that stock for Action Alerts.
Much higher, thank heavens.
All right, Jim, we're going to continue the conversation talking about many more stocks. Please join us on actionalertsplus.com.